Do CEOs of $100 million mining companies make house calls? That's exactly what happened when Dan Wilton, CEO of First Mining Gold, called and informed me he'd be coming through St. Louis, willing to meet with me. When I told him I'd never leave the basement, he agreed to come here, sit down, and talk about the company. I've got about 30 minutes of great content for you where Dan and I talk about First Mining Gold, the value proposition offered by this company, the projects, what they're doing to move them forward. But more importantly to me, we dive into some of the softer side of things. Things like, how aligned is Dan with the shareholders? What's his level of inside ownership? I think you'll be really surprised at what you learn in watching this video. And I'll tell you one final thing. I talked to Dan several times over the years on the phone. I got to know him pretty well, but you get to know a person much better when you meet him in person. I spent several hours with Dan. My expectation was that I'd walk away with a good feel, a better feel for the quality of person that I'm dealing with when I'm looking at the CEO of First Mining Gold. I'll just tell you this, he exceeded my expectations. He checked all the boxes in terms of what I look at as a person from a quality perspective. Let's get into the video. I hope you enjoy it. And until next time, you be well. Hey everybody, it's Ron from Ron's Basement. Joining me today is Dan Wilton, CEO of First Mining Gold. It's a pleasure to have him as a guest here in Ron's Basement. And Dan, welcome.
Oh, Ron, it is absolutely my delight and honor, A, to be able to actually meet in person, which we've never done before,
yes.
And B, to be invited to the basement,
yes,
which is
yes.
the home of so much great work that you do. So, no, delighted to be here. Thanks so much for having me.
Thanks. And today we're going to talk a little bit about the company, a little bit about the background of the company, and Dan is kind enough to agree to share some great information with us. You know, the first thing I wanted to touch on regarding First Mining Gold and your position there, you know, you always strike me as being one of the more committed CEOs. And there's a backstory on how you got the company or got into the company. Share with us kind of how you got started with First Mining Gold.
With First Mining, I mean, going back to kind of when I cold called Keith.
Yeah, that story.
That someone told me they needed a CEO. So I had come out of my partnership. Prior to First Mining, I was a partner in a mining-focused private equity fund for about 5 years. We invested at $800 million under management, investing in late-stage mining projects around the globe. One of which is kind of combined and grown to become Equinox Gold, another one of your favorites. And I'd come out of that partnership kind of came to an end, and I was looking at what's next, and someone had said, "Oh, if you want to find where there's some great projects, you should look at this First Mining Gold, the thing that Keith Neumeyer put together. It's got all these great projects, and, you know, they put them together in 2015, 2016. It's a bit of a hodgepodge. Like, just have a look. There's a couple of really good projects in there. Go have a look at Hope Brook." So I said, "Oh, I'll go have a look at Hope Brook." And I'd seen the Hope Brook project before because I'd actually looked at all of the projects in First Mining at one point or another with my private equity hat on. Just because they're great projects and they were all looking for capital in the time that we were investing before First Mining bought them. So I kind of had a look at Hope Brook and said, "Oh, that one, you know, on its own, it's really interesting. Maybe not the thing that I kind of wanted to take on." But then someone said, "Well, you know, do you know Keith? Like, you should. I think they're looking for a CEO. Like, you should call Keith." Well, I don't really know Keith, but I more or less cold called him. Which, you know, not a lot of people cold call Keith Neumeyer, but right. Anyway, I called Keith, and lo and behold, I just kind of said, you know, I think you have a probably the best collection of development projects in Canada and sitting inside one vehicle. And much as you need a CEO, I think you need someone to kind of help manage this portfolio of projects and, you know, do the things that we have done, which is prioritize and allocate capital. And then, you know, as it got into it, kind of build the team around it. So Keith said, "Well, what do you know about running a public company? I said, nothing. He said, well, that's a bit of a problem. But anyway, I met with a bunch of the board, and lo and behold, someone thought it'd be a good thing to give me a shot at it. So that was 3.5 years ago.
3.5 years ago, and here we are today.
Absolutely.
Right?
I never would have dreamed that I'd have been in Ron's basement.
Well, here you are. I'm glad you're here.
Absolutely.
I'm glad you're here. You know, another thing that I look at when I analyze mining companies, my investments in mining companies, is how much skin does the CEO have in the game? And I'm not asking you for any specific numbers, but I know from, you know, public disclosure documents that you've invested a significant, or what to me would be a significant amount of capital into the company, your own money into the company. And, you know, sometimes I'll see companies, small mining companies that might brag about 20% inside ownership. But that amount of money may not really be material to that CEO. And I feel like...
Or they got it for free.
Or they got... That you've put what to you is a significant amount of money into the company. And is that a safe thing?
That's a very safe thing to say. I mean, a lot of my initial investment that I put into the company, I bought some shares in a couple of days, I think just after they'd announced that I was joining. And then in the first two financings we did in 2019, and it's a very different company in 2019. We didn't have the balance sheet that we did. I thought it was really important as a sign of commitment to be more or less leading investor in those rounds. I ended up being the third largest investor in both of those private placements in 2019 and 2020. And, you know, it's all public information. You know, that those investments totaled a bit more than $1 million of my own cash going in, buying stock. I've bought a bunch in the market as well. I've, you know, exercised a few options and some RSUs recently, but I'm now over 5 million shares that I own, and, you know, money paid for all of them. So
safe to say you are aligned with the shareholders.
I'm aligned with the shareholders. And,
I feel in alignment with you.
No, 100%. You know, sometimes to the discomfort of my wife, but we're aligned with the shareholders.
I understand.
You understand that point.
Before I forget, I must also disclose that I am a shareholder of First Mining Gold. And I'm not being compensated to do this. I'm feel lucky that Dan has agreed to come down here in the basement.
No, listen, we're delighted, Ron. You are one of our most engaged and I think best informed shareholders. And I've told you this before. The analysis that you do is top flight. And there's a guy who worked as as a corporate finance professional investment banker for 20 years on Wall Street and Bay Street, and you know you do more work than 99% of the investors in the stock. So
that's a big compliment.
No,
Thank
it's
you.
a real testament to the work that you do.
Thank you. Let's talk about Keith Neumeyer for a minute. Keith Neumeyer founded the company in 2015. He still serves as the chairman of the board. What's his level of involvement with the company? I know he owns north of 15 million shares.
17 and a bit million shares.
So he's got some interest in the company.
Yeah.
What's the level of involvement? Do you talk to him on a regular basis? Do you communicate, get support?
Yeah, Keith is very involved. He's very, very engaged. This company is one of his children, right? He founded it. He takes our wins and our losses very personally.
Sure.
He knows many of the shareholders here, and so when things are going well, he hears about it. When they don't think things are going as well or things are quiet, he hears about it. No, but he's super engaged, but engaged at that level of a chair. So, you know, not into the day-to-day and what we're doing, but in terms of the real strategic focus when we make bigger strategic moves, you know, Keith's it's absolutely involved.
Okay.
As our a lot of our board, we've got a small but a really dedicated board that, you know, that really does a lot of heavy lifting, and we get a lot of great guidance from.
Involved. So Keith founded the company. A few years later, or maybe 4 years later, you took over. And at that point, the company, as I see it, basically had a portfolio of 6 major projects.
Correct.
3 of which you have signed partnership agreements or a business combination in the case of Treasury Metals. Tell me how those are, to whatever extent you want to touch on them, how those three partnership arrangements have played out. I know that you structured them in a way that I see as being very strategic. You were very patient about how you went about closing the deals and coming to agreements. But is there anything you want to touch on those three?
Yeah, sure. I mean, they have a few things in common in that they're all great projects that I think when we in 2019 went through the process of prioritizing, because it's one of the things that I came to realize when I joined the company is asset rich, tons of great assets, but we didn't have the team or the capital to do the work that was going to get those projects to the milestones that they needed to get to. We kind of had to focus in order to do that. And so if we were going to focus, you had to focus on the one with the, biggest bang for your buck. Okay. And we saw that as Springpole, biggest project, defined path to hit real value milestones, going through pre-feasibility, going through the permitting process, feasibility, to that permitted and construction ready stage. So we just had to make some decisions on the others. And the first one kind of sought us out, actually. The team at Ateco had just had this great success with Bellevue Gold in Australia, which was past producing mine in an old mining camp that they went back in, grew the resource. Right. It's now going into production. And they were looking for the next one, scoured the earth, and the one project they wanted to do in Canada was Pickle Crow. So they called us and we said, no, of course we could never entertain any deal on our projects. And they called again and we kind of thought, okay, well, let's hear what you might have to say. And then we came to realize what that project needed was lots of capital spent on exploration. And this was a team that had just had a great success in Oz, ability to raise the capital, and they're really talented explorationists. So we thought with that one, it's kind of further down the track for us. It was all inferred resource, even to get it to a pre-feasibility study or a feasibility, take a lot of just infill drilling, but it needed to grow first. So found a great partner to do it. And that was 2020. And Ateco's done an amazing job in 2 years. They've more than doubled the resource there, delineated all kinds of new zones, new styles of mineralization on the Pickle Crow property that people didn't know were there. And it's still in that resource growth stage. So really excited to see kind of where it gets. Sure. Because it's gone from 1 million-ish ounces to 2.3 in their JORC code. And yeah, they have not stopped just the growth aspect.
Expanding.
Yeah. And it's going to keep expanding. So, they've now spent, I think, in excess of $30 million drilling there in 2 years. Yeah. 125,000 meters of drilling. So and for context, that's not quite, but almost the total amount of drilling in Springpole. Right. Right. They've done that in the last 2 years. So they've been at it. It's fantastic. And then Treasury, we did, kind of just after that one closed, we went into the pandemic. We're trying to figure out really existentially how we were going to have the capital to move forward. And you'll recall, we did the Treasury deal and the Silver Stream with First Majestic kind of within a week of each other. Right. But those were two kind of strategic pillars where ultimately we knew Goldland needed to continue to grow, but it made sense really with Goliath and let them do the heavy lifting on, again, more of the infill drilling, which Treasury's done. 60,000 meters. They're in the middle of a 25,000 meter program now. And a dedicated team that could take that through the studies and the permitting work that we couldn't do that in Springpole at the same time. Right. So yeah, that was that one. And then Hope Brook was later in 2021. But a similar strategy and philosophy, a great project, but we'd looked at it harder. And we knew that there is an interesting economic mine there at $1,500 gold, but it really, to get over that threshold and get excitement, it needs to grow a bit more too, which is
needed more investment.
Definitely more investment, needed more drilling, and needed someone to then go through the turning that resource into a mine plan. So yeah, that's kind of how those all came about.
And it feels like with all three of the projects, you've handed them over to very capable hands. Is my impression. and groups that are laser focused on each of those three projects. Like they don't have a Springpole or they don't have other things they're dealing with. They are all three laser focused on those projects.
Exactly. Yeah. And that was one of the things that we were really looking for, that this was going to be the core project, and with a group that's going to be able to raise capital and be able to move those things forward. Yeah. So all three of those have been able to deliver on that. And
I know you structured all the deals separately. In the case of Treasury Metals, it was more of a, I guess you'd say, a combination.
Yeah.
You still retain, is it 15%?
15%, yeah, 20 million shares of Treasury.
And the other two, with Hope Brook and Pickle Crow, you retain a 20% project interest.
Yeah.
There's a royalty agreement.
Royalties
future
on all
cash payments.
Yeah.
So you structured these deals for potential good long-term growth for First Mining.
Yeah. No, I think that's exactly right, Ron. And each of them is a bit unique in that, the projects needed slightly different things. There are different milestones. For Treasury, it was closer to that. Everyone kind of knew what the game plan was going to be around combining them. Economic study, moving it to a construction decision, because it already had its federal environmental assessment approvals. No, but each of them, the important thing from our standpoint, particularly in the Pickle Crow and the Hope Brook, is we're carried to real value milestones. So in Hope Brook, that's a feasibility study. In Pickle Crow, that's what's termed a decision to mine, or a construction decision. Okay. Both of those are going to require a lot of drilling to get those deposits to that stage.
Okay.
So after they hit their earn-in spend, we are free carried until they hit those milestones. And so that means we don't take any project dilution. As they spend money, I think our project interests get to be worth more. And that's a nice thing for holding on to some of the longer term value, as is holding the royalties and some of the back-ended payments as well, which are, some of them are pretty meaningful numbers.
Yeah. Yeah. No, my impression is you applied a lot of strategic skill in how you structured those deals.
Put a lot of thought into it.
But also for the benefit of the three partners, that they, obviously they can do very well, but First Mining will also do very well.
Yeah, I think they're pretty balanced that way, which is nice to find that partnership. And that kind of plays its way then into what's the actual ongoing operating partnership, right? We're still very active with Treasury. We're still very, Representative James Maxwell is on the board of Big Ridge, and we still have, I guess they're now twice or bi-monthly, but meetings with Ateco about the game plan at Pickle Crow.
Okay, so we have those three projects that are moving forward. That leaves three wholly owned projects still within the First Mining portfolio. Let's touch quickly on the two smaller projects, and then maybe we'll wrap up with the flagship, Springpole.
Sounds good.
Is that okay?
Absolutely.
So, Cameron, I know that's an exciting prospect. I'll let you tell me about it.
Yeah, no, sure. And, it's, I always say when we're giving presentations, we never have enough time to talk about Cameron.
We have all the time you need. Yeah.
There you go. Cameron's getting his big debut.
This is the Cameron video right here.
Phase 2, Cameron video.
We have Paul Morris, investor relations over here. He's going to be following it anyway.
Yeah.
Go ahead. I apologize.
So Cameron, a bunch of the people who followed us will remember, it's a project that First Mining acquired in 2016. It's located about 80 kilometers north of New Gold's Rainy River mine, still in that kind of core area of northwestern Ontario. A lot closer to infrastructure there. Road access to the property, the road goes out to where there's a power line. It was a project that had a ton of work done on it in the 80s and 90s. Taken to feasibility study twice, ramped down 300 meters on the ore body, developed into ore on 2 levels. Bulk sample sitting on the surface right now. There's 35,000 tons, grading somewhere between 3.5 and 4 grams. So it's been mined, it's understood, the metallurgy is understood, and it's a great project. It just for whatever reason, kind of like the other ones we're talking about, needed a little bit of extra something in order to give it that kind of critical mass. There's a really interesting small mine there right now. really good depth potential. And then what we're starting to discover is along the strike horizon, Cameron is at the intersection of two serious scale structures. The Pipestone Cameron Fault and the what is the other structure that goes in? It'll come to me. Anyway, so last year, 2020, you'll remember we acquired the Metalore property, which kind of sits in the middle of our two pieces of Cameron. And Metalore had a small resource on what they called the East Cedar Tree deposit, which was right beside the property boundary where we had the Dubinsky deposit on the other side.
Okay.
These are pretty much related to the same thing. But as you often find in the mining business, two resources on either side of a property boundary usually means that no one's done the work to see what's in between. And then we have the Dogpaw, which is a couple of kilometers away, all in a structurally complex area, but something that now that we've got James Maxwell on the team, James and the team have been really kind of in anticipation of getting some exploration going at Cameron. They have really dove back into the data there. And what we're really excited about is, in similar kind of big structurally controlled environments, in places like the Abitibi, in places like Timmins, places even like Red Lake, you'll tend to see kind of what they call a periodicity of the deposit. So every 2 or 3 kilometers, you might find some structure or fault that increases the concentration of gold. Some of that's been looked at Cameron. The company that we bought it from, Coventry, had done a lot of targeting and not a lot of drilling because they were doing the targeting in 2013, 14, 15 when the market was rolling over.
Right.
So we're kind of left with this really target-rich environment. We're waiting on drill permits, and the drill permits were moving forward with the Indigenous communities in the area. We have one exploration agreement signed with one community. That happened, I think it's almost more than a year ago now. And making good progress with another one of the communities around the project as well. So moving toward that, getting that kind of permitting and social license to get drilling there. But there's a small program that we've kind of scoped to really understand this Dubinsky Dogpaw area. Because if you look at the historical resources the historic resources would be between Dubinsky Dogpaw and East Cedar Tree, between 400,000 and 500,000 ounces. Haven't really been looked at in modern time. So not just how are they related, what's in between them, what are the strike extents, and these are all drilled at deepest kind of 250 meters. And we've got drill holes into the Cameron deposit that are down almost a kilometer. Okay. It's got this kind of lateral or the continuity of depth that you want to see for projects like this. And so some of the drill holes that they have, like, we don't talk about Cameron much, but you go back to some of the individual drill holes and there's like, tens of meters of 10 grams plus.
Right.
Like there's some real juice in the system. It's just that continuity has never really been well understood, but we're looking at it now with tools that they didn't have in the 80s and 90s. So no, we're really excited about that one and hope to get drills turning there this year. And Cameron is sitting, they said 80 kilometers from Rainy River, which, is kind of starting to round the corner on the life of its open pit. And, you'd think mine life extensions and ability to bring other resource into that project is going to become important and more important as it moves forward.
As time moves forward.
Yeah.
What about Quebec? I guess that's the final.
Yeah. Quebec is a bit of an amalgamation of projects. So we own a few of them 100%. Okay. We have Duquesne and Pitt, which are kind of classic high grade narrow vein Abitibi style gold projects. Duquesne is a past producing mine, has a bunch of infrastructure that's there. And then we have the projects in the Duparquet project, which is actually a few different mineral titles which have different ownership. So earlier this year, you'll recall we increased our ownership in Beatty Gold Mines, which has the kind of about 75% of the resource in the Duparquet project. And then we have 10% of the company that owns Donchester. We have 100% of the Central du Parquet project. So it's a bit of a complicated mishmash, but
of properties.
But the deposit, what a lot of people forget, that deposit was taken to pre-feasibility in 2014 by Clifton Star.
Not too long ago.
Not too long ago, at a time when the gold price is a bit of a victim of its timing. The gold price was $1,300 an ounce, but the Canadian dollar was at a premium to the US dollar at the time. It was $1.10 US to the Canadian dollar.
Okay.
So the foreign exchange rate really kind of hampered the project. You're looking at an effective, $1,200 Canadian gold price project.
Mm-hmm.
Today, that price is $2,200. A couple of weeks ago, it was $2,400. So, the metallurgy is complicated at du Parquet. It's refractory. A ton of work was done there in sort of between 2008 and 2014, leading up to that pre-feasibility study. Really good quality metallurgical work.
Yeah.
It's got, just between 2008 and 2014, they drilled 260,000 meters into this deposit, which is only a few kilometers long. Mm-hmm. It's got a resource in total at du Parquet that would total, I'll add my M&I and my inferred here, mm-hmm. which I'm not supposed to do on 43-101, but almost 5 million ounces, if not a snick over 5 million ounces. Mm-hmm. And it's in like the best postal code in Canada. This is, you draw a straight line between Val-d'Or and Timmins, and this is it, there. Right? It's the northern part of the Abitibi, and, 3 past producing mines on the property. So we really like it. The challenge is always, is there an opportunity to pull it together? And, at some point I'd like to think that maybe we could, but yeah.
Well, it sounds like there's quite a resource in the ground and mm-hmm. quite a bit of work that had gone into it in the past.
A ton of work that's gone into it.
That was Clifton Star.
Clifton Star, which First Mining acquired in 2016.
Wow.
Yeah.
Well, let's move on to the, I guess we'll forget about Cameron for now and move on to the flagship project, Springpole. Yep. Anything you want to say about Springpole? I know I was reminded just recently that it is considered to be one of the largest undeveloped gold projects in Canada.
Yeah, absolutely.
Right.
At a 5 million ounce equivalent resource. This is one of very few projects that can produce in excess of 300,000 ounces a year. So has that real scale, big enough to be meaningful to the biggest gold companies in the world. Lots of great work that's gone on at Springpole in the last couple of years. You recall the pre-feasibility in 2021. We moved from there into a bunch of trade-off studies to better understand what was the project that we were going to permit.
Right.
And that involved us really taking a close look at the tailing strategy, which we ended up changing from the PFS to what we're proposing in the draft environmental assessment document. But a lot of the work over the last last year has been preparing and compiling that draft environmental assessment, which is on our website, all 10,000 pages of it and all the sort of supporting backup documents. Right. But that's a huge milestone for us to get that pulled together, the first real comprehensive view in real detail of the project. And so that's all going to get reviewed by the regulators who are going to have to look at it from each of the kind of specific areas of expertise that are studied in the table of contents in the EA. And that work's ongoing now. And we're going to get comments back, hopefully kind of before the end of the year on the regulatory side. And then the really important step from here is working with the Indigenous communities around us to make sure that we can collect their input, make sure that they have the time and capacity to review the project in a thorough way, and make sure that we understand a lot of the impacts on their rights.
Sure. Everybody on the same page.
Yeah.
Get everybody working together.
Yeah. Yeah. And really, understand and take into account the traditional knowledge that these communities have around the environment. So lots of that work ongoing now.
Great.
And it's a process. There's still a lot of work to do on that front, but no, making progress, I think.
So a ton of quality projects,
Yeah.
right? That's a given. And that's important. I want to have quality projects, but I also want to see quality people behind the projects. And I've always felt with First Mining Gold, when I look at the people, when I look at, starting with whether I start with you or I start with Keith, right? Because Keith is, in my opinion, a very high quality person. And then I work through and I kind of dig in and, learn about Steve Lines, that you have assembled a group of quality people. Anything you want to say about that?
I'm delighted with the team that we've been able to build here. It's, this is an industry that's really competitive for talent.
Sure.
And I think, some of our team members have gone on to other opportunities, but I think that we've been able to attract really great people to kind of come in behind them with different skill sets. We added Jeff Renson recently, about 3 months ago, as our chief operating officer. And I've learned so much from Jeff in a short period of time. He has a lot of experience on sort of civil engineering aspects of mining projects, particularly water, dams, operating in environments where you have dams and you're managing water balance and tailings.
Okay.
That's been a big part of his career. So he's has such a great appreciation for the real detail in behind what are the plans to manage some of those really most important and visible risks that we need to talk to the communities about. Right. So no, that's great. And obviously, James Maxwell on the exploration side has built a great team. And, we can't kind of wait to be able to start talking in more detail about great exploration success that we're going to see that team deliver.
Absolutely.
Yeah.
And Paul Morris, what's his title? I think a lot of
Director Investor Relations.
Director of Investor Relations. Paul, you want to come over here and say hi?
Sure.
Here, maybe you can squeeze in.
The middle.
Come right here in the middle.
There you go.
This is Paul. He showed up at the basement too.
Yes.
And Paul, is it safe to tell people that if they have any questions about the company or want to?
Of course, absolutely. Paul at firstmininggold.com. Send me a message. I'm happy. I'll get back to you very quickly or call you, whatever you want. But I'll be there for you.
Yeah. These guys are the best. How many CEOs and directors of investor relations make house calls? I'll tell you what.
I love it.
Like the good old days.
There you go.
I'm like, who's at the door? My wife's like, he says he's the CEO of First Mining Gold. Like, tell him I'll be out there in a minute.
Yeah, I didn't invite that guy.
No, I'm honored to have both Paul and Dan here today. Last couple things I want to touch on, the royalties.
Yeah.
I have a term I like to use when I think about your royalties. I call them live royalties because they are actively, or some of them are actively. Yeah. How much drilling has been done on the royalties? Meter wise, money wise.
If you kind of point to meters, last year it was probably 125,000 meters drilled into our royalty properties.
Right.
Like that's a significant. That's an Osisco sized program.
Right.
Yeah. In terms of dollars, in total, that's probably over the 2 years. $40 or $50 million spent on development, exploration, and development on those projects. Right. And the exploration's growing them, as we're seeing at Pickle Crow, as we're going to see at Hope Brook, as we've seen at Goldlund. They made 2 new discoveries in between Miller and the Goldlund deposit last year, and they're just scratching the surface there. Okay. They got a great team that they've pulled together, and so I like that term. They are very active.
They're living
for sure.
They're growing.
Exactly.
That's I don't know. That came to me, and
I'm going to use that one.
There you go. It's all yours. Right. See what you learn when you come to the basement.
Absolutely.
Financial condition of the company. One thing that's always attracted me: 0 debt. You've got some cash. Yeah. You've got some investments. Your financial condition is it safe to say? healthy to kind of weather through some of the turbulent times we might be having in the market these days?
You know, we're sitting at about 20 million in cash. And then there's all the other things in the portfolio that over the longer term give you the ability and flexibility to keep yourself funded without necessarily having to raise equity, right?
Okay, right.
Now, some of them are really good investments that you're just not going to sell for cheap.
Sure.
Some of them are, the project interests are things that, kind of need to hit milestones and are illiquid. So you got to kind of work through how and when's the right time that those get kind of turned into cash. But things like the royalties even provide, a real fundamental underpinning of the value here. Right. And at today's price, call it 150 Canadian market cap.
Right.
The cash and royalties and project interest and everything else is, if you count the royalties in there, it's probably 100 or more of that 150. Mm-hmm. And so then you're getting Springpole and Cameron and Quebec. So projects with, real fundamental value of $1.5 billion Canadian dollars for 50 million on the market cap.
Right.
Yeah.
It's an astounding value proposition.
It's maybe so astounding that I'm going to get fired, but
now, right, yeah. I always but and it's not just First Mining. The whole sector has been just, brutalized, I guess you would say, over the last 4 to 6 weeks. And there are astounding values. I thought there were astounding values 4 weeks ago, though, and they became more astounding. So, but things will change. Things will,
we could do a whole other segment on on where we are in the cycle. And, we were talking about this at lunch today. It really feels to me like this is, if we're not at that capitulation moment, which we haven't really seen since 2015 in the same way, it sure feels like we're close. So,
at times it feels like it'd be hard for sentiment to get any lower. But, who knows? Hey, last thing I want to touch on, partners. You've got some business partners or consulting partners that have done some work. Mm-hmm. Ausenco is one, Wood PLC.
Yep.
When I look at the people that are at the company, I see top-notch people. But when I investigate these companies that you're partnering with, they're also kind of the top-notch cream, the top tier.
Yeah, I think we've, you can't get through something like a feasibility study or a permitting process without having, a big team that comes with it. Like, it's an enormous undertaking. Yep. And the team at Wood that's done the work with us has permitted almost every big open pit mine in Ontario in the last 20 years. Yep. And I actually had the good fortune to sit in a room with Sheila Daniels from Wood a couple of weeks ago, last week, in fact. And you know what it's like in your profession when you're in a room with the people who are at the top of their game.
Right.
And they just see through the clutter of detail to the really salient points really quickly. Mm-hmm. Well, I had that experience. Just phenomenal. And the same thing with the team at Ausenco, who have a real experience in building projects and building mines. And as we've gone through this whole period of cost escalation, they've been great sounding boards because they're building mines right now. And so you want to know what's happening with the price of steel, like what's happening with the price of equipment. They're buying it like right now. So
excuse me.
No, and they've been great partners. The Ausenco team are shareholders, right? They helped finance our PFS and still own all those shares. So it's we've been really lucky with a lot of the external partners that we bring to bear. Them or drilling contractors. It's a tough industry, right? Sure. So we're very lucky to work with the people that we do.
Awesome. Thank you so much. Thanks for being here. Is there anything else that you need to say? Anything we missed?
Only just, make sure that you're liking and subscribing, because if you want to talk about a place that you get, the hardest working man in the analysis business, he's right here, and it's all happening in the basement. No, Ron, it's just been an absolute pleasure to be able to come and meet in person and to be invited into the workshop in the sanctity of your home. I really genuinely appreciate it. And it is for shareholders like you that, that we do the work that we do. And if everyone was as engaged as you and worked as hard as you did, we'd all be very, very lucky.
Well, I appreciate those kind words. And as you were saying that, I was thinking, the hours I've spent here in the basement reading about the company and others, it never crossed my mind. You never know what to expect in life, that the CEO of First Mining Gold and his esteemed partner, Paul Morris, would be here in the basement with me.
Fantastic.
Just in a few years. So
That's
thanks a
wonderful.
lot. And we'll see you soon. Thanks, guys.
Thanks.
Bye-bye.